Bollinger Bands helps us time our buys and our sells. And it really does alert us as to when potentially the prices might be too high or too low. Hey everybody, Steven Sitkowski here. I am the Chief Investment Officer and partner in Market Mastery Group. We are dedicated to teaching folks like you how to become better traders so that you can potentially make money regardless of whether the market is going up, down, or sideways. This is part of a series that I'm doing on technical analysis. And we have for our subject matter, Bollinger Bands. You've probably heard of Bollinger Bands. You may or may not know what they are, how they operate, and so forth. So essentially, Bollinger Bands deal with standard deviation. So let me just give you a sort of high-level concept here. The idea is that stocks will become overbought and oversold, and that's due to euphoria or fear. And isn't that true with just about any commodity? Doesn't real estate get too pricey, or it gets oversold in different markets where now the values are just incredibly good? And the same thing happens relative to a stock, but in the stock market, we have a way of being able to measure this. This was created by John Bollinger in the 1980s, I believe. And essentially what Bollinger Bands show us is a range, 2 standard deviations away from the 20-day simple moving average. So essentially 90% of all the action, the price action on a stock, happens between those 2 bands. So when the price of a stock goes above the band, it is typically overvalued and is more likely to come back down into the band, and vice versa. One of the other things that we want you to do is to watch for what's called the squeeze. So depending on the market volatility, the bands will expand and contract. Once they contract, it is highly likely that in the near future, you're going to see increased volatility on that security. Okay, so the Bollinger Band, you can see you have the lower range right down here, and the upper range, which is up here, and then that little dotted line, that's the 20-day moving average. Notice when, and ideally what you want to do is if you're going to do a buy, do it near the bottom, and then when it gets near the top, you would then sell, in theory. Keep in mind, this is just one indicator, but whenever it gets outside, and we'll look at a number of different securities, gets outside the band, right? We say that it is overbought, and notice it drops. And then it gets outside the band on the low end, and what happens? It goes up. Now, notice the squeeze right here, little contraction, and then this thing started to get more volatile with more movement. So that was Microsoft. Let's look at Intel. Oh, a couple of obvious squeezes. Look at the squeeze right here. See that? And what happened? Boom, that thing popped to the upside. Then you get a squeeze right here. What did it do? Boom, it popped to the downside. Now, very important. When we get a squeeze, it just means we're going to have increased volatility. It doesn't tell us the direction, so we've got to watch for that. Notice stock goes outside the upper band and then goes down. Then it goes, look down here, it's outside the lower band, and then it goes up. It went outside, came back in. Here's a stock I did really well with trading options, Teladoc. They do all the telemed stuff. And notice there was the squeeze down here, and then look, lots of volatility. Got outside the band, dropped. Got outside the band, dropped. Got below the band, went up. I mean, aren't these patterns remarkable how they play out over and over? And these guys, this is just random, right? Look at the squeeze right here. This is VMware. The squeeze, boom. Look at the volatility, kapow. Got outside the band here. I would expect it to go lower. Here is Nordstrom's. So pretty tight right there. Yep. Squeeze, look at the volatility. Look at the volatility. Let's see what we got for Microsoft. So Microsoft, we had the squeeze right here, moved to the up, then the down, got outside on the down, and went higher. How about Netflix? See the squeeze here? Not a great deal of volatility. You had another squeeze here, lots of volatility, got outside the band, went higher, got outside the band, came back down. I mean, it's over and over and over again. So hopefully you see the value in being able to utilize Bollinger Bands helps us time our buys and our sells. And it really does alert us as to when potentially the prices might be too high or too low. Thank you, John Bollinger, for all of his hard work. Thanks for all of you watching. If things like this are of interest, you want to learn how to be able to trade both stocks and options and do it more successfully. I've been teaching now for 30 some odd years. Take advantage of it. A couple of times a week, I do live free webinars. If you'd like an invitation to the next one, click on the link below. We'll send you out the invite. We'll send you out a reminder. There's no cost, no obligation. It's just my way of being able to share with you what we do. You'll pick up a whole lot of knowledge and maybe decide, hey, you'd like to learn more from us. And if you would, that would be fantastic too. If not, no problem. Keep what you learned on the webinar. So hopefully I'll be seeing you soon. Until next time, God bless everybody. Stay safe. And if you would like to register, go ahead and click now. Talk to you soon. Bye-bye.